It's a mixed quarter one for L&T Finance, but the loan book segment, which is a clear winner this quarter. The company saw a record growth in retail loan book. Let's listen in from the management itself. We have Sudipta Roy, MD and CEO, joining with us to help us understand what are the key growth drivers behind the numbers. Mr. Roy, good afternoon. Thank you so much for giving your time to ET Now. First things first, congratulations that your overall loan book has reached its highest ever level. But if other than acquired gold loan portfolio, it has been a slow growth quarter. Can you tell us what is the on-ground situation and what is leading the slow growth?
Yeah, I think, overall we have had a 18% growth year on year in terms of disbursements. And obviously, a portion of the disbursements have come from the acquired gold loan portfolio. But if you see, our overall growth has been, still, better than what we did last quarter. Primarily, the little amount of sort of slowness is in growth in terms of that because of certain business lines. Primarily the rural business finance vertical, where still the industry is not out of the entire asset quality crisis that it saw last year. But what we have tried to do is that we have tried to step up the disbursements in that business vertical this quarter as well. If you see, our rural business finance vertical has actually grown in terms of disbursement 10% quarter on quarter. Yes, though on a year-on-year basis, there is a little bit of a degrowth of about 3% odd. We have almost reached about 1,800 crores of steady state disbursement trajectory in the rural business finance vertical, this quarter. And our objective will be take it to about 1,900 crores per quarter or about 2,000 crores per quarter as conditions improve. So overall, yes, bit on a year-on-year basis, you might see some sort of tempering in disbursement growth between primarily in the rural business finance as well as the two-wheeler portfolio. But if you look at it on a Q-on-Q basis, all the business lines have gone reasonably well, including the rural business finance vertical, which has driven a growth of about 10% on a Q-o-Q basis. Overall, we look forward to a much stronger growth in the coming quarters to come.
Mr. Roy, hi, Ankur this side. Last time you have mentioned that rural group loan and MFI business will resume growth trajectory picking from Q1 FY26, which is the current quarter, and that will gain pace in the second half of the current financial year and reach normality by the beginning of festive season of FY26. Are you on track or is there any delay?
No, we are on track. One of the things that you should recall is that, probably we should have much stronger growth this year. But, if, for example, if you look at last quarter we did about 5,600 crores of disbursement, which was about 5,100 crores in the previous quarter, which is in Q4 of FY25. One of the things which probably has sort of delayed the recovery slightly is that the Karnataka ordinance, and Karnataka is a large market for us. Obviously, there we saw a little bit of cessation of collections performance for a brief period of a couple of months. And after that, the Karnataka collection efficiencies have started inching up. But we are being cautious in Karnataka, and our disbursement momentum in Karnataka has not picked up to that extent that we would like to. So overall, the disbursement momentum has reasonably picked up the remaining parts of the country, but in Karnataka, it still remains sluggish. As and when Karnataka collections efficiencies inch back and disbursement in Karnataka picks up, the growth will also pick up. And as you are aware, monsoon this year is going very well. Overall, it's projected that the coverage and the rainfall will be about between 105 to 110% of long period average, and which is actually great news for the rural economy. We had a very good monsoon last year. If we have a good monsoon this year, it augurs well for, the Kharif crop, on which the sowing has been, above what we saw last year. And so on the back of a good Kharif crop, on the back of an improved liquidity as well, we expect that H2 will be also very, very good. And as H2 sort of picks up, we also do believe that disbursements in all of our lines of business will pick up, especially in rural business finance and two-wheelers also, which have linked to a large amount of the rural consumption sentiment as well.
I completely agree to that. The seasonality factor will definitely impact overall businesses, be it any segment. But Sudipta, having said so, on a year-on-year basis, and if we talk about a particular segment, which is a two-wheeler business, the company and in particular the two-wheeler segment, where we did see a drag this quarter, you were expecting two-wheeler business growth between 15% to 20% by FY26. The question here is, will you stay with this guidance?
I will sort of see again, this is also dependent on what the two-wheeler industry also does in terms of the overall OEM growth rates as well. So in a way, it is linked. However, I do believe that H2 will be better. And overall, I think we will end up overall for the year with a 15% plus growth rate in disbursements.
And Mr. Roy, what has led to such a big jump in personal loan segment? Is this growth sustainable?
See, in our personal loans business, we have been sort of approaching the business differently from many other players in the market. We have been focusing more on digital originations together with our large partnerships. So, there are three methods of doing personal loans. One is obviously your own customer base, then you go through the direct sales channel, and then you also try to acquire through the digital channel. We have focused more on what we call the direct digital channel or the large partnerships, wherein our partnerships with Amazon Pay, Cred, and PhonePe are adding significant volumes and scaling up every quarter. We will sort of add a couple of more large partners in the coming quarters to come, which will also add to the disbursement momentum. The benefit that we get in, sort of partnering with the large partners is that, the process of cherry picking credit-worthy customers is much easier because many of these large partners see large amount of engagements with their customer base, and they're able to figure out the credit profiles, probably in a far better way than probably sort of off the street direct sales agent is able to do when he acquires the customer. So we do believe that, and if you look at our cross-sell volumes as well, especially to a seasoned two-wheeler base, that has also been growing on a quarter-on-quarter, as well as we have been expanding our direct sales channel as well. But on the direct sales channel, we only sell to salaried customers. So overall, across multiple channels, we have been expanding this business. And as we add more large partners, the business volumes will continue to grow. So yes, this business will see good growth, good risk-calibrated growth going forward. And I do believe that this will become a significant driver of our profitability in a couple of quarters to come.
Absolutely. We really wish and expect the business and the growth stays as the way you have expected. Moving ahead, what is the reason for a jump in your NPAs? I mean, other than rural, MFI and two-wheeler segment, is there any pressure in any other segment? What is the outlook for NPAs going ahead?
See, overall, we saw obviously stress in the microfinance sector and the rural business finance sector last year. And, majority of the sort of the forward flows and the NPA addition has come from that particular sector because our book size is also very large. You would know that we are the third largest player in the industry with almost a 26,000 crore book size. Also on the two-wheeler, and we have told the markets last couple of quarters as well that we saw on the margin sort of asset quality issues in the two-wheeler segment as well as a little bit in the personal loan segment, which has since been corrected. So overall, if you see, the majority of the sort of the stress pool addition has been from the rural business finance and a little bit from the two-wheeler and the personal loan segment. However, over the last year, we continually sort of fine-tuned our credit policies as well as our onboarding criteria and implemented Project Cyclops, which is probably the industry's first integrated three-dimensional sort of AI credit engine. And the initial impacts on the two-wheeler business has been extremely good. And we have seen excellent results. Now it has been almost 12 months of operation on Project Cyclops on two-wheelers. 100% of the portfolio comes to Project Cyclops. And we have been focusing on prime on the two-wheeler business as well.
All right, Mr. Roy, thank you so much for joining at this hour and explaining the details of Q1 numbers.